I don't know the last time I actually went on Facebook, changed my profile picture, put up a status update, or did anything incremental on that social media platform. And it seems like I'm not the only one. There's a lot of people in the same boat, which is why the company posted an absolutely abysmal set of Q4 numbers. And here's what it did. It saw the company post its worst one-day loss since its Wall Street debut back in 2012. The shares of Meta, which was formerly known as Facebook, actually pummeled a whopping 26% on Thursday, posting its biggest single-day slide in market value for a US company. In fact, the social media giant went ahead and blamed Apple Inc.'s privacy changes. They blamed the increased competition. But bottom line is that it was an abysmal set of numbers. And here's what it did. This huge drop resulted in erasing over $251 almost billion from Meta's capitalization, or $200 billion from Meta's market capitalization. That saw around $29 billion go from the chief executive officer, Mark Zuckerberg's net worth. But it didn't just have an impact on Meta. It also saw the entire tech-heavy NASDAQ index see an absolute walloping. And it looks like as of now, Mark Zuckerberg is very keen to coax the world into an alternate reality, but these very disappointing numbers were very quick to burst his metaverse bubble, which is what a lot of the tech analysts are saying. But while the company, in fact, has been held by a lot of investor groups like hedge funds, it's left a lot of these funds potentially, exposed, and due to this huge wipeout in the shares, and a lot of other institutional investors have been heavy owners in the company. But here's what happened on the other hand. Amazon.com gave back to the market what Meta potentially took away. Well, you had the company, the e-commerce giant, poised to gain nearly $200 billion in its market value if the 14% gain in the after-hours trading on Thursday following the Q4 earnings holds to Friday's close. In fact, it saw the biggest single-day gain in the United States stock market, and this just after Meta was at the other end of the record book with that $250 billion wipeout. Now, the cloud computing business for Amazon has beat Wall Street estimates. The company has also raised the price of Amazon Prime subscriptions, and that's alleviated some of the concerns about the impact of the cost increases on profitability. And this comes just after it suffered its worst day in March 2020 because of those concerns from Meta, raising concerns about big tech's financial numbers. But I think what this is going to do is it's going to have everyone pause and really calibrate each and every tech company's results individually rather than looking at it as a whole. So that's really the big news that took place in the tech world.